All right, my beautiful friends, here we are together again at last. It's been a few days. Kind of strange to be away this long. But anyway, I hope you all had a great holiday. It's time to get back to work and make sense of the senseless. I have a bunch of things I want to talk to you about today, this Sunday, November 25th, 2018. Markets, a look ahead. Well, let's start off with, how about this? How about something that is, I can't even put words into what I'm about to say, so I'm going to just vomit it out. We found out yet again, I mean, this is incredible. Citigroup and JP Morgan Chase, this was just the end of last week, got caught again rigging the markets, rigging rates. Now, look, so they got a fine. They got a fine. Like every single other time they've both been involved in this is not the first time. I mean, I'm almost losing count. And it's not just these banks. Bank after bank after bank gets caught rigging these markets in one way or the other, and all they get is a fine, not one arrest. Just like now. I believe this happened on Friday. Both of these banks got caught rigging markets. They get a fine. Nobody gets in trouble. And you know who the joke is on? It's on you and it's on me. Truly, I mean, seriously, when are we going to get someone to do something about this? I mean, it's never going to happen. Our president won't get involved. Absolutely not. There's other nonsensical things that are being used as distractions. So the general public just can't pay attention to what's really going on. They have to be, led along like sheep while the real stuff is going on underneath it all. And that's the truth. It's a never-ending story, and this is why the middle class is getting decimated and will continue to be decimated moving forward. Let's talk about utter destruction. How about this? So, my email box. You all know what an epic email box I have. Well, as you may or may not know, Bitcoin, cryptocurrencies have gotten decimated. Just this morning I checked, the price of Bitcoin was around $3,500. So I get all of these emails. Hey Greg, should we start buying Bitcoin now? Should we start getting involved in cryptocurrencies? Well, again, I have stated repeatedly for months and months now that I cannot value these things anymore. I have no idea. This is the truth. I mean, I can't say it another way, but it doesn't matter to some people. They keep asking me the same questions. I don't know how to value cryptocurrencies anymore. I don't get involved in them anymore, For all I know, Bitcoin could be worth zero or it could be worth $35,000. I have no idea. So with that said, if I don't know how to value these things, I can't suggest to you whether you should be buying it or not, and I won't touch it. Forget about it. If I don't understand an asset, and I don't anymore, that's it. And the party is, look, I will say this. When Wall Street got their long, ugly hands on Bitcoin futures, that's when the party ended. If you notice, there was direct correlation here with regard to the Bitcoin craze, mania, or whatever it was. I don't even know what to say anymore. So to all of you who have written to me, Greg, should we buy it? I have no clue whether or not you should buy it because I can't value it anymore. Lost my mojo a long time ago with regard to Bitcoin or any of these cryptocurrencies. So like I have explained to you, I think it was last week, this guy is not touching any of it. So if that helps you out, I hope you can gain a perspective on that. It's insane. So let's talk about these markets here. No secret, markets are under pressure here despite the fact that the U.S. 10-year yield is remaining suppressed. I also explained to you last week that Although the mainstream, the series of COD channels that exists on this planet, they're trying to tell you that the bond market is stable. The bond market is not really stable. Okay, I covered this. We have rates dropping. That's not a stable market to me, and that may mean that more pressure is coming for these markets. Despite the fact, again, that suppressed rates have allowed cash to flow into the stock market like there's no tomorrow. The fly in the ointment, and you know what it is if you follow this blog, is the dollar. The dollar has been in a steady climb lately. So, again, we need to put a lot of things together to understand what's going on, or at least try to. Again, look, before we go over to my lovely website and look at some charts, we are existing in financial fantasy land. It's not real, and I can't stress this enough to you. It's kind of laughable to me. I don't know how many of you like Google me or go into chat rooms and say, oh, what people are saying about me. There are some people who believe this market is real and that I'm out of my mind. Oh, Gregory Mannarino says these markets are fake. Well, Greg's crazy. Greg doesn't know what he's talking about. Well, you know what? Maybe I don't know what I'm talking about. To me, and I'm sure to most of you, world central banks suppressing interest rates for an entire decade, allowing bubbles to form, doesn't seem like a real market to me. Bank after bank after bank getting caught rigging these markets, that doesn't seem like a real market to me either. So either Greg is crazy, like a lot of these websites and chat rooms are saying, or Greg's got it right. Let me know what you think. I think I already know. I mean, because I believe if you follow this blog, you have a very clear picture as to what's going on here. It's utterly mad. We're living in a mad freaking world from the top down. You know that. So again, to try to make some sense of this market here, let's go over to my lovely website. There is a link in the description of this video, traderschoice.net. Click on that. Let's go over there. If you happen to be on my website, well, let us continue. I'm going to open up my page here. All right. First things first, and I want to cover this too because I'm getting cremated with regard to emails regarding this. Let's, you and I, go all the way to the bottom of my lovely page, traderschoice.net. Let's look at this gauge, technical analysis for SPY. SPY is what? Exactly, the ETF that tracks the S&P 500. Now, look at it without deciphering it. First of all, we have a buy signal here. Now let's look above it. It says below, current technical position, SPY ETF, brackets, month. This is month. So many of you just don't read that, and they think it's a day or a week. It's not a day or a week. This is a month, all right? So keep that in mind. Yes, the markets have been dropping, bounce, drop, bounce, drop, whatever. But let's look a little deeper into this. We have 8 sell signals, 9 neutrals, and 7 buys. So that's where we are with regard to this gauge here. And just remember, this is a monthly chart. Let me explain this to you while we're at it. This is not a market where you or I can trade an index. Can't do it. This has become sincerely a stock picker's market, and that is why if you just go up, scroll up a little bit, and just go look at my lovely trading chart, and just go over this way, you're going to see all of my current credit spreads or positions that are open. None of these, you will notice, are an index. They're all individual stocks. Speaking of individual stocks or credit spreads, one of these spreads is causing me a little bit of a problem right now. If you notice, Apple here, the puts I sold, which are the ones that really matter to me, the strike price is 172.5. We dropped slightly below that on Friday, so I need to watch this very closely. Again, I have it hedged with the puts I bought. Still, I don't want this equity, or this derivative, because that's what it is. Options are derivatives. to be where it is. I wanted to go higher this week. I still have an entire week to see where this goes. Let's see. All the rest of my credit spreads here are doing absolutely fine. Looks like I have no worries yet, but we'll see how this crazy market plays out. Let's look at a few more things. Again, let's look at my center chart here, trading chart, where you put in any symbol. You know you can do this, right? Anything. We're going to play with that in a second. But let's look over at the bond market chart. As you can see, a lot of buying, then we kind of dropped off, we're kind of leveling off here. Now let's just go below that and look at the dollar bullish ETF. Again, no secret, dollar's been going up. There's our fly in the ointment you all know about. What we want to see is that bond market not sell off. We want to see bonds get bought up or remain where they are. Okay, I don't want to see them drop dramatically because that's unstable. I also don't want to see them rise dramatically. That's unstable. So we want to see them more remain in a range. You understand? Pretty simple, pretty straightforward. Now let's look at this chart right in the middle, trading chart. Again, SPY, I have it set up. This right now looks bearish to me. Why? Again, look at those three bands, okay? You got those red candlesticks below that lower band. That's not a good signal here. Could it reverse? Absolutely. But I don't see a sign here that we're in for any major gain on this, at least right now. But we'll keep our eye on this. It depends on a lot of geopolitical things. You know, stories are getting floated out there all the time about China trade. It's a big one. China trade is the biggest thing right now. If a story start getting floated out, true or not, because we've been seeing a lot of this, that we're close to a deal with China, or China wants to come to the table, or whatever it might be, stocks will respond in a positive way. You understand? The other thing we need to keep our eye on, and President Trump is keenly aware of this, and we'll talk about that right now, is crude oil, which has been falling off of a cliff here. Again, there's a reason why, and I'm not justifying this, President Trump is keeping his posture with regard to Saudi Arabia, all the stuff that is going on here. There's a lot of calls for him to be very tough because of the killing of that journalist over there. You know, look, I guess, look, he has to play the game. It's the truth. I'm not saying it's the right thing to do or the wrong thing to do. He's playing the game. The game is, despite the fact that we all understand that Saudi Arabia is an oppressive regime with some pretty outrageous well, let's put it this way, policies with regard to groups of people or how they conduct business over there. The fact of the matter is, and again, this goes back, I'm not saying this is right or wrong, I'm just, you decide for yourself here, but the fact of the matter is, they are pulling the chain with regard to crude oil. The petrodollar is what it is, and President Trump will do whatever he has to do right now. Any president would, and it's not just President Trump. Any president would do the same thing, regardless of it, because again, we're in other words, they got us by the you know what because of the petrodollar system, and unfortunately, that's the system that is running the world right now. The petrodollar really is running the world. That's why the U.S. has the world reserve currency. You all know that. I'm not going to go off the deep end on it, but that's what's going on. But the fact that crude oil is falling is not good for the banks, which I know you don't give a damn about, neither do I. All they do is get caught rigging and rigging and rigging some more, but nothing happens, of course. Oh, they get a fine. Oh, yeah. No one gets arrested. And it's all just a twisted, sick game. Also, energy stocks are going to suffer as well. Again, this is not the United States of America. You know that, right? This is the United States of corporate America. President Trump must play the game. He's been playing the game now for a while, just like Obama did before him. And just like every other single president before them. You understand? It's, well, maybe not going back to the beginning of our creation of our country here. This was not the way it was supposed to be. It was supposed to be a government of the people, by the people, for the people, but now it's a government of the corporations, for the corporations. You know, that's it, period. You and I, we just grease the wheels and we get crumbs thrown to us. That's the truth. But we try to make sense of this market. That's the truth. Now they went off on a deep end, off the deep end. Let's go back to my chart here, SPY. Let's put in a couple of more things. Where it says SPY, I want you to click on there. I want you to put in QQQ, enter. Okay. Tech sector, no secret what's been happening to tech lately, Apple included. This is looking bearish to me as well. But, if you look at the Fisher 9, which is that oscillator right below there, we might be bottoming out here. Maybe. Again, so many things are in play, and we got to watch it. I'm not saying to rush in here and go buy tech. I'm saying you need to be cautious. You need to trade this market appropriately. You all know that. Let's look at GLD. This is the paper derivative, which does not exist because there's no such thing as paper gold. You all know that. But this is paper gold you're looking at here. We almost have a little cup and handle going on here. Formation, which is bullish. But again, no, this is not real. It's not on the elemental chart. And I can guarantee you more banks are going to be rigging this. Just like Citigroup and JP Morgan Chase, which just got caught rigging rates again. For the how manyth time? I have no idea. 10, 20? Let's look at SLV. SLV, enter. This is looking a little bearish to me, I'll be honest with you. We're below that middle band here, that blue band. Fisher 9 might be topping out. Remember, silver or paper silver here, much more volatile. It's very volatile, as a matter of fact, when you compare it to paper gold, which doesn't exist. All right, look, I know this is getting kind of long, but I think I covered a lot of important things here for you. Just one more thing I want to go over at the top of this page here. This real-time, most active gaining and losing stocks. A lot of people have been writing to me about, Greg, how they should use this. This is more for day traders. Understand that. We're looking at things in real time that are very active, gaining or losing. So this thing here is specifically for people that want to get in and out of a trade within a day or two at most, honestly. I know there are a lot of day traders out here that followed my work, but I'm really not a day trader, and you can tell just by looking over at my credit spreads how I am playing this market. Anyway, I'm not going to go off on the deep end with that either. You know what to look at. You know what to look for, people. That's the truth. Going to be a very interesting week. There's no doubt about it. And what we are going to do is reconvene in the morning. It's going to be all kinds of fun, all kinds of lovely, and I'm looking forward to it. See you in the morning.